Let's try that again. Good afternoon. There we go. A very, very warm welcome to each of you that have come out today. This is the Mobile Money Seminar, of course, but it's also the very first seminar that we have for the Mobile for Development programs. There are 3 in total. And the very first one is Mobile Money. And that's quite deliberate, actually. And I want to tell you why we started with Mobile Money. Some of you have been around this industry for a little while. I know I have a few gray hairs. There might be a few others out there. I won't name names. But there are a few of you who have been here since the early years in Mobile Money. It was very uncertain. We had just a few mobile money services, not a lot of scale, not a lot of clarity, and a lot of unknowns. Fast forward today, and you're going to hear some of the amazing success stories coming out of the industry. Last year, we told you that it's become a $1 billion industry, which is to say that there's $1 billion every day moving through mobile money platforms, which is staggering. And shortly, you'll hear from the team the new numbers, which I think will impress more. But coming back to why is this event the first day, and why is mobile money so important? For me, it's about what it's enabling right now. There's almost nothing you can see across the development landscape where mobile money isn't playing some kind of key and critical role to what we do. Or said another way, perhaps, is that it's an absolute linchpin innovation across the development sector. Whether you look at humanitarian response, whether you look at agriculture, whether you look at energy, so many of these different verticals, I don't think any of us imagined how pervasive mobile money would become. But indeed, mobile money is now enabling all of those. And so let's just take them one by one for a minute. If we look at humanitarian response, our new survey has shown that 55% of all mobile money providers have now partnered with a humanitarian organization, in many cases to deliver digital cash and voucher assistance. If we look at gender, and if we look at closing the gender gap, we've seen that mobile money is empowering women by making them feel safer, more connected, and providing access to financial services and employment opportunities. And looking at rural, looking at the last mile, where we know that people are sometimes being left behind, we've seen in this year's survey that 50%, more than 50% of our respondents have at least one specific product targeted at rural customers. This means great news for rural households. It also means great news for agriculture value chains. This enablement, of course, can only continue in an environment of trust, and if consumers believe that mobile money platforms are safe and secure. And so that's why I'm especially proud to be able to talk about mobile money certification, which many of you will have seen was launched in 2018 in April. And that is really a very rigorous 300 indicator scheme which evaluates whether mobile money platforms are taking care of consumers' money well. And I'm now pleased to report that we have providers across 3 continents who have achieved this gold standard level of certification, which is representative of 133 mobile money accounts. So to conclude my brief welcome remarks, I think the work that we do in Mobile for Development and the work that so many of you do here in the audience is about catalyzing partnerships. And what better enabler do we have to do that than mobile money, which is underpinning so much of that. So it's my pleasure to hand over to Ruan Swanepoel, our new head of Mobile Money Program at the GSMA, who's going to launch the State of the Industry Report, our flagship publication, which we believe has become a guiding point of reference for the mobile money industry. No pressure, Ruan. And then after that, we'll hear from a very distinguished panelist of what the transition toward the payments as a platform model is going to mean. And I think this is really important to understand and is really the new era of mobile money. So please join me in welcoming Ruan Swanepoel.
So I'm going to be moving around a bit, but thank you very much for joining us today as we launch the State of the Industry Report for 2018. So mobile money's been around for over a decade now, and it's continued to drive financial inclusion through a number of obviously use cases. And as we've seen, the market has also looked at the banks and reaching beyond where traditional banking services has gone. We know that today a number of new services are out there, especially if we look at Asia. We've seen a lot of new fintech players coming into the market. And again, this is going to be interesting to see how the market is going to develop over the next couple of years. So I'm going to jump straight into the numbers now. When we look at the 2018, we've seen a record number of new accounts that's been registered. 143 million accounts has been registered. This has brought the total of accounts up to 866 million globally. What is, however, very interesting is that 90 million of those accounts come from Asia. So we can see that Asia is continuing to drive strong growth. And I'll discuss a little bit more later in the slides. Moving on to some of the values and the transaction volumes that are going through the system. In December 2018, we saw that the industry moved around $40 billion, which equates to about 1.3 billion a day. However, whilst most of those transactions are still majority driven through cash-in and cash-out transactions, we started to see that digital transactions have grown at twice the rate. We've also seen that a number of smaller markets have now reached the 1 million 90-day active customers. In 2013, we had 13 operations. Today, we have over 62 deployments that have now 1 million active mobile money users. When we look at the activity or adoption rate, we've seen that across Africa, a number of markets have now reached over 50% adoption rate. And in West Africa, we can see that, for example, Ghana, Cote d'Ivoire, these markets have reached already 54%. What does this mean for the industry? I think the industry is maturing. We see a lot of the adult population in these markets that have now started using these services. And we expect that this will create a slowdown in new account activations, especially in the Africa region. But there's, however, some good news. There's a couple of sleeping giants. We're talking about Ethiopia, Nigeria, and Egypt. These markets represent potentially 110 million new accounts in the next 5 years. And I guess this is where we'll be focusing a lot of our attention in the coming years. So we talked about the industry's maturing. 2018 was an interesting year. We saw a lot of interesting events happen. Some of those are the fintech players or the tech giants from Asia making some big investments, especially in Southeast Asia. We've also seen a mobile operator in Africa spin off its fintech business unit valued at $3.5 billion. I think that's a great achievement for an African operator, and obviously shows the amount of investment in those businesses. We've also seen that the regulatory reforms in Nigeria, again, a great opportunity. And lastly, and I think we'll share a little bit more about this in the panel, we've seen the launch of Muale, an interoperable, regional interoperable service. That's a partnership between Orange and MTN, and I think Paul will share some more insights on that later in the panel. So based on these events, we've categorized it into four key kind of trends in the market. Number one, we're looking at enhanced customer experience. 2 is the diversification of the financial services ecosystem. Then we've also seen an increasing regulatory complexity. Sorry, there we go. And lastly, the expansion of the mobile money value proposition. So these are some of the 4 trends that we've identified. Another interesting slide. I mean, traditionally, the industry's been driven through cash-in and cash-out models. And if we look at a snapshot of kind of the value that's moved through the ecosystem in a month, we can see that most of it is still coming in from agents, right? Value being cashed into the wallet through agents. But what's interesting is now that there's also starting to value to come in through bulk disbursements, which are typically payroll services or people that are moving money from their bank account to their mobile wallet. So there's definitely been a shift there. And at the same time, if we look at the cash out, traditionally a lot of the value has been driven out through agents going back to cash. But now we're starting to see that value is also going towards bill payments and paying for goods and services, as well as going back to the banking system. And this is a really exciting shift in the industry, because what this means is that value is starting to circulate around within the electronic or the digital value chain and increasing the overall financial services. And I think this is definitely a trend that we're very interested to see how this will progress over the next couple of years. What are the key enablers or drivers behind these two, or this digitalization of transactions? There are two key areas: interoperability and smartphone adoption. So in markets that are interoperable, with markets that are interoperable, we've seen that P2P or interoperable or P2B transactions, off-net transactions, the interoperable P2B transactions, have doubled last year, and it has not negatively impacted the P2P on-net transactions. At the same time, we've also seen operators that have got banking integration or interoperable bank-to-wallet transactions happening, that these transactions have grown by 47%, which is again showing how this value is circulating around within the ecosystem. Then talking a little bit about smartphones. Smartphone penetration is increasing across emerging markets. We know that a lot of, as the cost is coming down, the accessibility to these devices are becoming more prominent. But at the same time, we can also see that in Africa, 90% of the transactions are still being performed through USSD. And which is in stark contrast for when we look at Asia again, where over 50% of those that responded to the survey is showing activity rates on apps, that people are using apps to transact on mobile money, which is again a very interesting behavior or difference between the regions. But smartphones are not just driving, or apps, not just driving more transactions, but also enabling the onboarding or eKYC of customers. It's making it much more simpler for these operators to bring customers into the ecosystem. And this brings us to the growth that we've seen in Asia. So one of the key enablers, we believe, has been smartphones. It's helped to drive the adoption and faster growth within these markets. At the same time, we've seen also a lot of fintech players, the tech giants, Alipay, WeChat, that's operating within the region, that's unlocked a lot of new use cases, especially around e-commerce. And what's interesting about Asia, again, is that a number of the markets there have much higher number of integrations between the operators and online merchants, which is higher than the global average. At the same time, they have a lower, significantly lower number of connections between bill payments and bulk disbursements than the global average. So a big opportunity still for Asia is the focus on driving investment towards more integrations and connecting more to billers or other like governments and enabling those types of payments. So looking a little bit at the trends around the regulatory trends that's been happening across the different markets in 2018, taxation is still very much up there. We know that obviously restrictive regulation around taxes, drives up cost, it drives away investment, and ultimately reduces the adoption of mobile financial services. We've seen in a couple of markets in Africa where taxes were introduced, the usage dropped by 30%, and at the same time, tens of thousands of agents stopped doing the business. So taxation is a big threat to the mobile financial services industry. Know your customer. There's some positives and negatives here. Some of the positive aspects is especially around simplified KYC, which enables us to use SIM registration as a tool to onboard customers, and also digital IDs. And I think a big focus going forward is to allow digital IDs to be accepted as a means to register customers. Then we have 36 markets today that have adopted the national financial inclusion strategies. And this is a great achievement, a lot of focus, drive towards everyone going towards the same direction and driving financial services forward. Cross-border remittances, another key enabler for mobile money. We've seen a number of markets launch connections between hubs to enable these types of payments, and we know that mobile money drives down the cost of these cross-border remittances. However, regulation is still very fragmented, especially in Africa, and it makes it really difficult to scale and to really get a number of those connections that we need to build an overall coverage of cross-border remittances in a number of regions. The last one, data regulation. I think this has been on everyone's lips for the last couple of years. We know that data privacy has become a big topic, consumer protection, And these topics will also filter into the mobile money landscape, and especially in emerging markets, which I think is going to be a big challenge because these markets today do not have the infrastructure to address a number of these types of regulation that is being introduced. Also, data localization is another key one. And we've seen, for example, in jurisdictions that you have to operate or only process data within that jurisdiction, makes it really hard to scale and to move these services across borders into new markets and obviously get that economies of scale that we need to really make this industry sustainable. Then looking a little bit ahead, where's the industry going? We know that that the revenue increase has been steady over the last year, at around 23% year-on-year growth for those operators that responded. However, the same operators that responded also indicated that 80% of the revenues that they receive is driven through customer fees. I think as the industry and as operators, we understand that this is not sustainable. We have to look at evolving the value proposition and how do we address individuals' needs and also small business needs. So a big change in that approach is needed. And I think probably the key message today is this shift to a payments as a platform model. This will enable operators to seamlessly connect to customers and service providers to offer a variety of services across the industry. So that's going to be vital as we move into this next phase of mobile money, is how do we create these payments as a platform. We've already started to see this shift in e-commerce. We can see that today mobile transactions that are enabling e-commerce payments has grown by 79%. We've also seen that in these respondents, 26% of the respondents indicated that they will be launching enterprise solutions within the next 12 months. So definitely the industry is starting to focus on this. We've also seen that operators that have launched services around savings, credit, and insurance, which are really able to keep customers on their networks, has increased ARPU of 24%. And at the same time, a higher activity rate, around 20% higher. So I'm going to end it here. We're going to go into the panel just now. Before we go to the panel, I'm going to show you a short video and probably a recap of the numbers that you've just seen. Great. So I'm going to invite up Greta Bull, the CEO of CGAP. She will be moderating our panel. And thank you very much, Greta, for joining us. And then please do download the report on the address. Thank you.
Thank you. I'm just going to put my things down. So just a few introductory remarks, and then I'll bring my panelists up here and we'll have a nice chat. So as Ruan and Yasmina both said, platform-based business models have become a really important enabler for the digital economy. From e-commerce to ride-hailing to food delivery services, the world's increasingly embracing digital platforms for the delivery of services, and that's often enabled by underlying payments capabilities. So in this context, many mobile money providers are expanding their value proposition and looking to transition towards more platform-based models, connecting consumers and businesses with a range of third-party services to meet their evolving needs. This involves some pretty complex challenges, like negotiating complicated interoperability arrangements with your competitors, oftentimes, and opening up payment and data rails for third parties to connect easily and efficiently. But it also pays dividends. So my favorite fact from last year's State of the Industry report was something that Ruan just referred to here, which is that operators that functioned as platforms enjoyed 42% higher ARPU than those that didn't. And I think the numbers that have just been presented confirm that this is a direction that the industry is going. So today we want to understand what it's going to take to get us from where we are today to a much more integrated platform economy. What are the opportunities and what are the challenges of a platform approach? And how can this dramatic shift transform the way the needs of the underserved and the poor are addressed? I had the distinct pleasure of discussing this with two companies that are leading the way in this space, Orange and Facebook. So we're going to start with a small chat amongst ourselves, and then we're going to open it up to questions from the audience for the last 10 minutes. So start thinking of your questions now, because we want to have some good questions for these two guys. So I'd like to introduce my two panelists, and I'm going to do my best to say their names the right way. So Paul Deleuze, yay, is the Deputy CEO of Orange Group, and he's been in charge of mobile finance since 2018. He is also the CEO of Orange Bank. In his prior life, Paul was a consultant at Oliver Wyman and Bain between 1997 and 2009. He joined Crédit Agricole in 2009 as the head of group strategy. And between 2011 and 2016, he was the CFO and then deputy CEO of Crédit Agricole Corporate and Investment Bank. I don't speak French, so that's
you should,
my best. I should. So please have a seat.
Thank you.
My next panelist is Sergi Herrero. I didn't do such a good job on your R's, but Sergi Herrero, who is local to Catalonia. So
I'm raised in Barcelona.
Back home in Barcelona. So Sergi is the Global Director of Payments Partnerships at Facebook. He leads a global team dedicated to building, growing, and optimizing the payment infrastructure that processes all commerce activity on Facebook's whole family of apps. He was previously the head of growth and partnerships for Latin America. Prior to joining Facebook, Sergi led new market initiatives at Square, and before that, he was vice president of business development, payments, and mobile finance at BNP Paribas. Welcome. And
thank you.
Have a seat. Oh, okay, I'm going to sit in the middle.
In the middle,
Great.
yeah, why not?
Okay, so I'm going to start with you, Paul. Orange Money recently celebrated a decade of financial innovation, and over this period, the way people transact in Africa has really changed quite significantly. And so has the mobile money industry, and so has Orange. For example, you now support international money transfers, bill and wage payments, purchasing TV subscriptions, but you've also invested in an e-commerce player in Africa, Jumia, and have joined forces with MTN to launch the Mawali interoperable payment system, and you've also licensed a bank, Orange Bank. So clearly you are moving towards much more of a platform-based approach, and that requires some degree of rethinking of traditional mobile money business models. But in some markets, the cash-in, P2P, and cash-out cycle still dominates in terms of use cases. So how is Orange Money thinking about broadening its value proposition and transitioning from that earlier model to a platform model, and what are some of the challenges that you're seeing along the way?
Okay, long question.
Sorry.
Long and difficult question. Perhaps let me give you a brief overview of how Orange Money was built and what happened in the previous 10 years. Well, there are three strategies. The first one, during the first 5 years, was about building the customer base. And so we developed Orange Money in 17 countries in Africa. We hired more than 150,000 small shops to do the cash in, the cash out. So it was all building the customer base. And at the end of these decades, we arrived to a customer base of 42 million customers, out of which around 15 million are active more than one transaction per month, which represent around 5% of the figure that was presented before Barouan. This was the first period. The second period was about developing the services within the transfer and payment environment. It was developing, as you said, corridor between African countries and between Europe and Africa. It was about developing merchant payment and so on. So we tried to enrich the value proposition of Orange Money. And now we are coming to the third period, which is just beginning now, which is, I think, the most enthusiastic one, is about first developing the customer base, and more widely, the partnership we did with MTN is about growing our customer base by reaching all customers of Orange and MTN, and at the same time, going beyond pure transfer and payment services. That's why we want to develop microfinance, micro-saving, micro-insurance. So at the same time, developing customer base and going beyond the pure payment and transfer environment, because I'm convinced that at some time, payment and transfer will become a commodity. And at this time, we will need to have developed our range of services much beyond the core, which is still payment and transfer.
And what are some of the challenges that you've seen as you've moved along that life cycle towards a platform?
Well, challenges at the beginning was an internal one, was to convince the telco guy that they could make money with a non-telco service. But now they're convinced. Now Orange Money represents between 5 and 15% of the revenue of the telco, can represent up to 30, 40% of their revenue growth, so they're convinced. But this was the first challenge. The second challenge now is to enter a much more regulated environment. I mean, not only micro-saving, micro-credit is regulated, but also the business of transfer and payment become more and more regulated. So we are moving to a small service, to something which is looked at by the regulator as serious as a banking business. And doing something regulated when you do not come from this context, this background, is something really new which we need to adapt to.
Yeah, great. So to that point, actually, in November 2018, Orange Group and MTN Group announced a joint venture, Mawali, which enables interoperable payments across the African continent, or across at least some number of corridors in Africa. And I know the GSMA Mobile Money program has been working with you for a number of years on that and helping to sort of facilitate the conversation. But what opportunities do you think will be generated by unlocking access to providers other than your own individual customers? And how is it going to drive the future of merchant payments and cross-border remittances in particular, but other services as well?
Okay, it's a good question, because it's not that easy to decide to open your books, to open your customer base to someone else. It's a big, big decision. I see three main reasons to do that. The first one is that, as I said, this business will be more and more regulated, and we need to be stronger to adapt to the regulation, especially as the regulation will ask for more and more interoperability. That would be a first reason. The second one is that we believe that if we do this joint venture with MTN, we will be able to grow our customer base, because many of our customers were not using our service because they didn't just have the usage of using it. If we can propose our customers in any African country to send money to an MTN customer, many people will join the Orange Money plus MTN payment system. Will be the second reason, growing the customer base. The third reason is an even more offensive one, is to develop merchant payment. I mean, if we go to the big retailers, these people, they don't want to discuss with just Orange, just MTN, tomorrow just Vodacom, just Airtel. They want to discuss with a global scheme. And if we come as a global scheme, they will consider us as serious as any big payment scheme. So that's perhaps the main reason, is to go more to merchant payment than now.
That is moving you very firmly into the payment space, and that's a space that regulators do stand up and take notice of. So how is the BCAO looking at, or other regulators in the markets that you're in, looking at some of those changes to your business now that you have sort of an interoperable?
So how the regulator is looking at us? It's difficult to speak instead of a regulator. It's very interesting. As you said, before joining Orange, I was a banker. I'm still a banker. But each time I went to see the regulator, we had tough discussion, not easy. Now, since I joined Orange, I've met regulators in France, in Spain, in Morocco, in Africa, BCAO. Each time, the speech is the same. They tell me, we will have very strong requirements. We will ask you to be as serious, as processed as a bank, on one hand. But on the other hand, we support you. And last time I saw someone very senior at BCAO last week in Abidjan. At the end of the meeting, the lady told me, good luck. First time in my life ever that the regulator tell me good luck. So strong requirement, but quite supportive at the same time.
Did she mean it?
I hope so.
Okay. So let's turn to Facebook for a moment. So in just 15 years, it's kind of amazing thinking about this. Facebook's grown from a college experiment to a global juggernaut with, I think, 2.3 billion active users around the globe. I know. I'm not sure my number's right. It's probably out of date already. I did Google it today. In some countries, Facebook is literally synonymous with the internet. You entered the payment space in 2015 by rolling out Facebook Pay in the US, and more recently you've moved into emerging markets with payment partnerships in Thailand, the Philippines, Peru, and I think you're currently looking at launching payments functionality over UPI in India through WhatsApp. So maybe, Sergi, you could start by just telling us a little bit about what Facebook's strategy is around payments and why the company's moving into this space, and just what your thinking is about what this business looks like for Facebook.
So, thank you, Greta. It's funny, I was listening to Paul. We come from the opposite direction. We were a merchant that we had a problem with ads. We needed to collect the money, and we suffered all the inconveniences that you can imagine to collect the money from our advertisers. They wanted to add and create campaigns in our platform, and it was super painful not to build the platform, but to pay us. And that's how we develop our payment services, to try to make it easier for our customers to pay us. And we learned that there's a lot of barriers, especially in emerging markets, to collect the money, but also to make it in a compliant way. So we start putting some resources and more attention probably 5-6 years ago, and we divided the approach into pieces. The first one is mature markets, so everybody that can pay with a debit or credit card, and the other one that everybody that cannot pay with a debit or credit card. For the mature ones, the strategy is very clear. It's to continue to make it simple for them to pay us and more convenient. We can create extended credit, anything that you can imagine as a merchant that you want to have on Facebook. That's the first step. The second step, hopefully, will be commerce. We see payments not as a commodity yet, but at some point we feel that it's just a necessary mechanism for you to transact online. So the focus is to get as soon as possible with a secure and reliable experience to commerce. For emerging markets, we are 3 or 4 steps behind. We have an advantage, as you said, we have a very good user base. The idea is how we can use our position to make it easier for you to register, create an account, and start transacting. With a big premise, we don't want to make up a bank. I'll say it out loud, we are not bankers. Our focus is on social and connecting the world. For that, we want to create a platform. And the idea is find people, Orange, banks, fintechs, you name it, that they are the true experts, and try to find opportunities on both sides and create areas where today they cannot operate and we cannot provide a service, and see if it's something that together we can make, as I said, more secure, more flexible and scalable, because at the end of the day, the partnership, it's only healthy if both parties win. For us, the long play, it's engagement, first and foremost, and the second one, it's commerce. So if we can start transforming, especially in emerging economies, how people use money, and I think that the report was pointing in the right direction. First is make it easy to put money inside the system, but then instead of quickly cashing out in some place close or far, be sure that we create experiences, rich ones, that allow you to use the money that you digitalize in a way that probably is going to be commerce, it can be goods or services. That's the long-term play. We are not there yet. We started only 3 years ago in the Philippines and in other markets. The results are quite promising, but still more focus to go.
Yeah, we've been fascinated to watch kind of the growth of informal sales over Facebook in a lot of the markets that we're in, not even the ones that we've mentioned. But around CGAP, we're starting to call this F-commerce. I don't know if you guys have done that or not, but
kind of. We are a data-driven company, and we pay close attention to what happens in our platform. And commerce, it's perhaps the next thing after connecting with somebody. You talk, you send pictures, videos, but at some point you want to transact, especially in emerging markets. You have this informal economy, and we saw a lot of movement. Our goal there was to make it easier for our users and more secure.
Yeah. So as you go into emerging markets and think about payments underlying your commerce goal, you're looking at markets where a significant part of the population don't have bank accounts, and in some cases don't even have smartphones.
Yep.
So how do you think about those markets, and what are the particular challenges that you've encountered in those markets, and just specifically around Peru, the Philippines, Thailand, and I mean India's got quite a well-developed payments infrastructure, but what are some of the hurdles you've had to overcome?
The usual ones, I would say probably the biggest one is KYC. So how we can onboard people in a way that is not the traditional way that you have to go with your ID to a certain location. We are trying to use our tools, which are pretty easy to use. So what we have in the Philippines, for example, is you take your camera, and with a selfie with your ID next to you, we can say that, yes, this is the person that the picture is showing, and with that create some sort of level 2 account, so at least you can start playing with the system. If you want to cash out, there's another set of friction points, but I would say that was the first one. How we can reduce to the minimum expression the KYC, but at the same time not compromising the security of the system. The second piece is agents. Believe it or not, there's still places where cash is king, and that's our own enemy at this point. So we try to be sure that we can digitalize this cash, and we need partners for that. So it can be the telco, which is the natural one, or other banks or institutions that they are also pushing for digitalization. So that's where we find partners there. And perhaps the third one would be the government. Similar conversations, they did not tell us good luck, but probably we needed to. Trying to find places where they believe in this mission of connecting people and on digitalizing, and being sure that we create this interoperability. For us, it's kind of a mandatory thing when we go to places. Otherwise, it doesn't work. We don't want to make kings of payments in certain places. We want to be sure that it's an open ecosystem, that everybody has a fair chance, and at the end of the day, a good product and the user chooses where they open an account or where they transact.
Is there anything that has surprised you as you've gone in and launched these services?
Many things. Probably, I would say the first one, it's the government. I think that they were very friendly and very open when they saw our approach of being like a platform, not charging fees, and being as reachable as possible for these populations that until that day they could not access. The second one is partners. So some of these partners, they see us as a threat at the beginning, and when we spend time with them explaining that we don't want to become a bank, that we are not going to take a piece of the equation, that our focus is on the ads business, and we are fortunate enough that that business goes well, so we don't need to monetize this one, and that we want to create these pillars and then focus on commerce. That was a surprise also, because folks that at the beginning you would say they are kind of competitors, they become friends and partners in this long journey, which is not something that we're going to solve now, but it's going to take more years and resources. So those two perhaps will be the good surprises.
Okay, so I'm going to ask both of you guys a bit of a curveball question that we didn't talk about before, just see what happens. So, I've been working with mobile network operators for a long time, and, sort of 3 years ago, there was sort of this idea in Africa of the over-the-top players are coming, they're coming, and everybody was freaking out, right? And now there is much more conversation, there's much more, people are seeing where the points of complementarity are, and where the business models kind of come together and really build on each other. That's all great, but how do you see that evolving, and where do you see risks over time? So right now it's all kind of open goal, and there's a lot to do, right? But at some point there's maybe going to be some overlap. So how do you see the complementarities, and then how do you see sort of the risks over time? Do you want to maybe start?
It's a complicated one. I would say we don't worry about that yet, because the goals and the issues are so big that it would be a waste of time to focus on what's going to happen in 5 or 6 years. Our goal is to connect as many people as possible and to empower them with tools that they can transact and create their own businesses there. And I think it's very aligned with what the telcos and other partners are doing. With that, we are happy. As I said, our business, it's ads. We feel very comfortable on that front. At some point, commerce will be hopefully fully digitized. And when that time comes, I think that there's enough value for everybody in the stack chain to be comfortable and not start fighting each other. I think they will be at the service if we do that.
I'm going to put that question to you, but maybe with a slightly different twist, because I remember I was involved for a while in the whole interoperability conversation in Tanzania, as were other people in this room. And I can remember when we first started that conversation, the word switch was a bad word. Like, they didn't want to talk about a switch, right? And so that's really changed. The mindset has really changed amongst the mobile network operators, both amongst yourselves. You have an agreement with MTN, but also with the over-the-top players coming in. So how do you think about this new kind of emerging platform business model and what the intersections are both with other operators and with the over-the-top players?
Well, first thing, I quite agree with Sergi. We don't see that, for that moment, any big risk arising, because Africa, at least in Africa, Africa is a market which grows so fast, where there is still some value to be extracted, and still some value to be extracted for the population and for the provider. That so far it's fine. It's so different from mature countries where there is no more value to extract for everyone, so everybody is fighting, which is not the case in Africa. About the issue of the platform and the switch, what I'm convinced is that the one who will win tomorrow are the ones who will have the data. Because if we believe that at some time payment or transfer will become a commodity, then the one who owns the data can be in position, for example, to lend to someone. And so far, the mobile operators, the MNO, we have the only available structured data about our customers, because these people, they don't have access to internet, they don't have poor people to access to Facebook. So the only structured data which exists is the way you behave with your mobile phones, the way you behave with your mobile money. So as long as we own the data, we'll be in position to decide if we lend money to this person or not. And that is a huge value for the customer and for us. So as long as we own the data, and this data is scarce, I think the switch is not a threat or a risk.
Building on that, the thing about Africa, so we've seen a huge explosion in all things digital, all things e-commerce in Asia in particular. Africa, I think, has been growing very quickly as well. But the thing that you kind of run into very quickly in Africa is a border. The countries are relatively small, and with borders come new regulators. The Bissau is kind of unusual in that you have one regulator for a whole bunch of countries, but a lot of the rest of the region is a lot of borders. But also, people are low income, right? So how do you think about that in a market like Africa, where you're dealing with small markets, lots of regulation, and very low income people? And what does that trajectory look like over time from a business point of view?
Well, with the question of low-income population, yes, it's an issue, but we did a test in Madagascar, which is one of the poorest countries in Africa, with a partner, which was PAMF, which is a microfinance institution of Aga Khan, to propose microcredit to our customers. After 1 year, we did, I think, more than 350,000 loans, small loans to the population, with a cost of risk which was below 5%, which is very reasonable. I mean, the big consumer finance companies in Europe, their cost of risk is between 5 and 7%. So, which shows that even with that type of population, you can do something which is profitable for the bank and for the telco, and also useful for the client, because we lend money to this population at a rate of about 15%. This population, if they want to lend money, otherwise they will go to an informal economy where they would pay more than 10% a month, where we ask them to pay 15% a year. So I mean, even with poor population, as I said, there is value to be created for the population and still value to be created for us.
Spoken like a true banker.
I'm a banker, I'm afraid.
Okay, so putting that question to you in a slightly different way, which is the borders question, because Facebook is all about scale, and you do have lots of borders and relatively small populations. So it's kind of easy to think about going into an Indonesia or an India or a Pakistan, but when you're going into a Zambia or a Rwanda, you're dealing with much smaller populations. How do you guys think about that? And what are the kinds of things you look for when you go into a market?
We are not there yet. So we are focusing on big markets first because we want to be sure that we provide something that is for value. So our approach is slightly different. For us, we don't care about the revenue. It's, are they going to use this product? Are we going to solve any relevant problem? If not, they're not going to be successful. So with that, then we focus on the smaller places. I don't think it's going to be complicated for sure, but I do think that with the right partner and the right approach, it can be very successful. And we don't need to be like doing all the things in all the places. And what I mean by that, it's perhaps in Zambia, top-ups is the friction that we want to remove, or like bill pay or something along those lines. So we are happy just focusing on one and then adding later on other products. So that's the approach. So far, it's going well. Our metrics are slightly different. So what we try to do is it's time spent and frequency. So if it really works, you use it on a daily basis. If not, it means that something was not quite right for us.
I love that. Every time I talk to somebody at Facebook, it's like, we don't have to worry about revenue. Wow, that's a nice problem to have. Okay, so Paul, turning back to you, you've invested in a number of different companies like Jumia, and you've got investments in startups through Orange Digital Ventures. So looking ahead, how are you thinking about how these companies will integrate with your core mobile money service, and what are the new kinds of use cases you see emerging?
Okay. Well, first, when Orange does an investment with Orange Digital Venture, the purpose of investment is to be profitable as an investment. I mean, if we can do business with it as Orange Money, it's even better. But we try to be a normal investor, a corporate investor, but a normal investor. So that's the first point. Second point, yes, we want to work more with Jumia. We've started to do so. The idea is to develop usage of Orange Money, but also to develop, as I said before, a microcredit. I mean, if a client wants to buy something with Jumia, we will be able to tomorrow, when we will have our banking license, to lend money to the customer to buy what he wants to buy with Jumia. So developing usage and then being able to lend to the client, thanks again to the data we have on the customer.
And what about third-party integrations? Are you looking at making it easy for smaller companies to come on your rails and sell their products and services through open APIs and sandboxes?
Yeah, it's something we're thinking about. Well, to make it work, we need to have an important part of our customer base to have access to a smartphone. Because so far, a very large majority of our clients do have access only to USSD transaction. But when more and more people will have access to low-cost smartphone, and Orange is thinking about selling low-cost smartphone, then it will be easier, as you said, to propose Orange Money to be a platform so that many players could be paid or could transact with the customers on Orange Money.
Great. I think I've already asked you the last question I had for you, so I'm going to open it up actually to the audience and see if we have any questions from the floor. Brad.
We're seeing a huge growth in Myanmar in a couple of different areas. So we're obviously seeing massive digital growth, and then there's been huge Facebook growth as a result, 80% smartphone usage, massive data usage, which for an emerging market is quite unusual. Yeah. We're now starting to see fintech mobile money growth as well, so our active users are now in the millions and growing very fast. The nexus of these two sort of growth points is actually starting to create quite an interesting dilemma for us. And one of the issues we're actually having is that there's been this massive growth of Facebook commerce. So literally we're having tens of thousands of Facebook shops that are emerging really without any structure, without any sort of templates. It's really just someone opening a page and putting goods up for sale. And where it all goes a little wrong, in most cases it's fine, but where it goes a little wrong is basically where consumers or where sellers are basically setting up shops, setting up mobile money accounts, receiving the payments, and they'll do it for maybe 4 or 5 days and then sort of shut the shop down, switch off the SIM, throw the SIM and so on. What's your thoughts on that? I mean, obviously, these markets are moving so quickly. where's Facebook's responsibility start? Where does it finish? Where's the responsibility, say, of the mobile money provider? We do the KYC, we do everything that's required. We're looking for solutions to sort of solve this problem for consumers, but you've really got effectively this informal leapfrogging e-commerce sector that is just, well, it's going so fast beyond the existing e-commerce sector, it's ridiculous. So just really interested in your thoughts and whether you're seeing this in other markets around the world.
That's a good question. We definitely don't want that to happen. So we want to be sure that everything that happens in our platform is secure and it's as transparent as possible. So we're trying to work with you guys to be sure that at least if we don't have a formal project ongoing, at least we share some data points to track fraudulent activity. The good thing is that these fraudulent guys, they follow a certain pattern, so we know ballpark, we can quickly identify if it's a fraudulent transaction or not, or a fraudulent account. So what happens if you try to create 5 or 6 accounts on Facebook and start to transact, and then you shut it down via the SIM or via your Facebook ID, we are pretty good tracking that down and showing it. So we don't have a better answer yet. We are spending more time on that topic. The idea is to do what we are doing, for example, in Thailand, where we clearly work with institutions in the country. We create a channel, and everything that goes outside that channel, it's marked as potential fraud. So folks that are trying to buy something online, they clearly see the difference between the official channel or the secure one and the unofficial one. But it's a tricky one. Fraudsters sometimes go faster than what we want, and it's an ongoing battle. The goal is, as I said, work with you guys to establish at least some guardrails of what is fraud and what is not, and also to be sure that they are using payment methods that are trackable, and it's not the typical prepaid that you lose completely track of how the money is used. So,
yeah. Do we have other questions from the floor? Till, I know everybody's name.
Thanks, Till Brewer with UNCDF. I wanted to ask about data. Facebook has a tremendous amount of data, what we would call alternative data in the financial services industry that could be incredibly valuable to players like Orange.
Mm-hmm.
And I'm just wondering if that discussion is on the table, which would really allow them to extend services, more credit potentially, savings, insurance, by having some type of analytics around your user base.
The answer is no. It's not on the table. We don't want to do that. It's clearly a red line. All these projects, we use tokens. So Philippines, Peru, we are a platform. The partners like Gcash, Paymaya in the Philippines, we use an interface to present their services. But when you onboard on their platform, you provide the data to them. I don't see anything, everything is tokenized. I'm very comfortable with that. I don't want to touch any payment data, and I don't want to exploit this for loans, credit, stuff like that. That's something that we don't want to do, and it's something that our management feels very strongly since day one. So the first moment that we touched payments, the first question that it came in our internal meetings was this one. And the answer was very clear. We are not going to do that. It's a red line. We think that there's enough value in other places, and we are creating enough possibilities to monetize somewhere else that this piece is not necessary.
Perhaps to clarify also, which is Orange's position towards this question of data. When a client asks us for a credit, could be in France, in Spain, in Romania, or tomorrow in Africa, we ask the client, do you allow us to have access to your telco behavior, not the payment, but your telco behavior, so that we can decide if we will be able to grant you a loan or not. If the client says yes, then we will have access to his telco behavior, and then we can prove that the telco behavior is a good proxy of a credit risk. And then we will decide if we grant the loan or not. But we will do it only if a client asks us for a credit. Then we will tell the client, look, we want to know you, and let us know you so that we can decide if we lend money or you to you or not. But what we feel is that based on the telco data, we have enough information to decide if the client can be granted a loan or not.
Do we have other questions on the floor? Okay, I'm going to jump in and ask a question, so think about what your other questions are. So actually building on what Brad said and a little bit on what Till said, it strikes me that partnerships are really interesting in this space, actually, because not only is everything moving at lightning speed, kind of the financial services value chain is getting disaggregated, and different parties are taking different pieces of it. Data is pretty central to it. And clearly, as commercial entities, you'll have your red lines, but how do you think about partnerships in this really shifting landscape where, you know, in Myanmar, the market might be this way, but in Pakistan, it's that way. And you know, you guys are really operating as a global player, and you guys are much more local in that market. So how do you think about structuring those partnerships, particularly when so much of this is informal?
Yeah. So we start at a global level. So as I said, there's some red lines that we are not willing to cross. So we try to be very proactive at displaying these ones, so there's no confusion or no misunderstanding. And then we go to the local regulations and the local ecosystem. And for that, we do the same thing. We disclose not what we want to do short term, but what it's our plan, and success means mid and especially long term. And we try to find partners that align on the long-term vision. If the long-term vision is aligned, we will work backwards and we'll find solutions for them to be financially sustainable in the mid and short term, but only with the North Star being the same one, we can build these partnerships. And we are very picky, and that's why we not expand super fast on countries, because we want to find the right partner for the right market. And we are not in a rush to paint them up. We prefer to go slower, but be sure that when we go to a market, we provide an agreement with the partner that it's good for them, it's good for us, and at the same time we create value for users.
Okay. How do you think about that?
Well, I fully agree with you. We are in markets which are evolving so fast that we cannot do everything alone. We need to partner because when you partner, you can quickly have access to a larger customer base. You can quickly expand your level of services. So we need to partner. But as Sergi said, we cannot partner with everyone. With MTN, we found that if you wanted to have all the mobile operators in Africa sitting at the same table, it would take years. So we thought it better to start with MTN and then ask other mobile operators to join us. That's for the interoperability. For the credit, we thought that at the beginning, we should partner with local players knowing the market. That's why we choose an NGO, PAMF, which is the NGO, as I said, of Aga Khan, because they know the market, they know what is good for the people, what is not good for the people, and you know, when it's about credit, it's something dangerous for the bank, but also for the client. So that's why we were very happy to start with PAMF in Madagascar. Then we had also a test in Mali, and we're still discussing with PAMF to expand this partnership in other countries. And yes, we will launch a bank at some time, but we will still work on two legs, partnership with NGO like PAMF and creating our own bank, because we don't know at the end what will be the good business model. So we need to be very open.
Yeah, it's interesting that you say that, because we've seen in East Africa, for example, this huge proliferation of digital credit with lots of different providers offering it, but over the rails of mobile network operators. Whose reputation is in the mix on that. And so it sounds like Orange is taking a much more controlled approach than we've seen necessarily in East Africa. Is that fair?
Yes, we try to. Before joining Orange, I was, as you said, working at Crédit Agricole, and I was sitting at the board of the Grameen Crédit Agricole Foundation. And when I told them I would leave to join a mobile operator, they told me, look, be cautious, because we have seen situations where there was a peak in the people asking for credit on Friday evening just to take money to buy some drinks for their friends. It's not something we want to do. That's why we were very happy to start with PAMF, because they have been in the business of microfinance for decades. They know what is good, what is not good for the business and for the clients.
That's great. Another opportunity from the floor. Do we have any questions?
I'll ask them, Greta. So Paul, just a question, particularly looking at all the markets you're in. As mobile money is getting bigger, it's really, I suppose, a reflection on how big mobile money is becoming as an industry. What's your view from Orange around how you interface into the national payment systems of these countries? And in particular, you know, are you looking to become part of it and embedded in that, or are you sort of separate to them in each of the markets?
It's a good but not easy question. So far, we have been creating something not within the large payment system. And what we do with MTN, in fact, is more or less to create an alternative payment system. But we see more and more countries where the regulator asks us to develop interoperability with the local payment scheme. That's the case in some African countries, not in Western Africa, but in other countries. That's the case also in Morocco, where all the mobile operators are invited to develop P2P services, but interoperable with the local payment system. So I think even if we don't want to, at some point when we grow, the regulator will ask us to develop interoperability with the local payment system.
Okay. Okay. Yeah. Go ahead.
Hello, I'm Laura Lefebvre from Waldremit. So my question is about the banking license you're applying for. So why are you applying for a banking license? Does it mean that at some point it's good to make partnerships with banks and microfinance institutions to offer additional value services to your customers, but at some point maybe you need to think about changing your core business, evolving your core business to, now you're becoming a bank because you're tired of doing partnerships. Is that what it means?
Well, in fact, it's a discussion we had within Orange because we could have, not only in Africa, but also in France where we launched Orange Bank, we could have done only distribution partnership with banks. But what we found is that not only the banks were not very happy to see Orange launching banking services, so partnership would be difficult to create. But also we believe that we want to be in that business for a long time, that we want to create value in that business, and that we can only do by being ourselves a bank. And yes, at some point we believe that our core business will evolve. Well, to be clear, telco will remain the number one by far, but at some point we will have a second core business which will be banking.
On that note, that sounds very interesting. Okay, well, on that note, it's been a fascinating panel. I've got big red signs saying time's up, so I won't spend too much time wrapping up. I could have talked to you guys all night. But thank you very much, and we look forward to seeing how your payments and mobile money as a platform businesses evolve over time.